Hey everyone, hope you're having a great start to your weekend. I figured we'd go over a quick review of what happened in the Bitcoin market this past week. First, if we take a look, the week right after the Bitcoin conference, sitting at $40,434, give or take. Not exactly the big Bitcoin boom that everyone thought would happen post-conference. If we then go ahead and we take a look, you can see that the market cap is sitting right above $750 billion. The inflation rate is still about 1.77%, and 90% of the Bitcoin supply has already been issued into the market. There's over 1 million active addresses in the last 24 hours, and miners were paid $37 million in the same time period to go ahead and secure Bitcoin, the most decentralized secure computing network in the world. Bitcoin is down about 41% from its all-time high, but it is up 22% from its cycle low. If we then go ahead and take a look at Bitcoin compared to gold in the S&P 500, yes, Bitcoin is down 35% over the last year. It's because of the base effect when it was going absolutely parabolic at the start of 2021. But over any other time period, 2, 3, 4, 5, 6, 7, 8, 9, 10 years, Bitcoin has absolutely destroyed gold and the S&P 500, worth paying attention to. Then if we look around this $40,500 level, only 315 days out of all of Bitcoin's life has it actually been above this level. That means that for about 93.5% of Bitcoin's life, it's been lower. So if you bought at any point there and you held till today, you would be in profit. Then if we take a look, one of my favorite metrics is the compound annual growth rate over the last 10 years. Bitcoin's sitting at 146% over the last decade. And that 5-year Sharpe ratio, about 1.53, still superior to all other assets, gold, S&P 500, NASDAQ, and TLT. And of course, this is all happening with an incredibly high inflation environment in the United States. 8.5% report coming in for the month of March, significantly above that 2% target that comes from the Fed. And if we take a look, Will Clemente pointing out that the spread between the CPI and the 10-year yield is at an all-time high. Not exactly what you want to see if you're a long-term investor. But is it actually 8.5% inflation or not? Well, it's hard to tell. There's a brand new metric out called Trueflation, which points at 13.4% being the actual inflation rate. We're trying to measure a more accurate inflation measure than the 8.5% CPI number. So if we then go ahead and we take a look at on-chain metrics, Will Clemente and Blockware doing a fantastic job this week going ahead and breaking down what's going on. First, short-term holder cost basis. We can see here on the far right that the price ended up getting rejected off of that short-term holder cost basis. This is usually because people have been in the market less than 155 days. As soon as they get near break even, they've been underwater, they're going to go ahead and they're going to sell. That's why we continue to see struggle to get up above that short-term cost basis. Then if we take a look at the futures open interest with crypto margined accounts, what you can see is that that continues to trend downward. This means that people aren't using their Bitcoin or cryptocurrencies to actually grab any sort of margin. This means it's healthier and it's unlikely that we will see a long cascade of any sort of volatility in the market. Then if we go ahead and we take a look at exchange outflows, we can see that it's reached a rate that's only ever occurred 3 times before in Bitcoin's history. That was in March of 2020, December of 2020, and September of 2021. And so if we then continue, one of my favorite things to look at this week, this is a very important chart, is the supply not moved in at least 1 year. We are now at an all-time high. This means that the Bitcoin bulls are not selling. Then Blockware taking a look at the entity adjusted dormancy flow, showing that in the heavy opportunity zone, it's just the 6th time ever that we're here. It's also the longest time Bitcoin has ever spent in this zone. And then the illiquid supply continues to go absolutely parabolic. That pink line showing that the market continues to get more and more illiquid. Very important if you're going to look at an asset that is simply determining price based on supply and demand. And lastly, talking about demand, think about that persistent bid in the market coming from the Luna Foundation guard. That's right, the Terra ecosystem saying that they're going to buy $3 billion worth of Bitcoin. Well, they've been doing that. Here we have their Bitcoin holdings in that foundation. You can see that they continue to stack thousands and thousands of Bitcoin, about $100 million or more per day. As long as there's a persistent bid in the market and we have a more and more illiquid market, something tells me that all we're going to need is some sort of catalyst, and this thing is going to go boom. I hope that you enjoy these weekly updates. Next week, we'll be back with myself and Will Clemente going ahead and breaking this down on video. But in the meantime, I hope this is helpful, and we'll see you guys next week.
Hey you, did you like this video? Great, we make 5 of them a day and post them here on this channel. Make sure you subscribe, like the video, and see you next time.